Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Finally, Verizon investors had a good day. The stock was up 9% on Tuesday after the company reported third quarter 2023 results. That's what I want to dig into today is what were results? What did they look like? Why are investors so excited? It's a little bit of a nuanced story because the initial numbers reported don't really tell the full picture. We have to show exactly what the trajectory is for the company throughout 2023 because I think once you do that, the trends do look really positive. But that's what I'll dig into today. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. Check out fool.com/ASYM for their top 10 stocks to buy right now. And I want to start with some of the operating metrics for Verizon. These are some of the key operating metrics that we get each quarter. The number of customer retail post-paid net additions. This is a number that's been falling. So basically means that Verizon has been losing people who have a wireless plan with them and just pay a monthly subscription. The good news is that has been offset by gains on the business side. So 151,000 additions there. The other growth aspect to this business is broadband. Fixed wireless access, which is actually what I'm using right now, is just 5G broadband wireless. Added 384,000 customers last quarter. Wireline added another 50,000 for 4,000 additions on the broadband side. So this is where you see a lot of strength in the business is in broadband, and then business side, consumer is doing a little bit worse for Verizon. But when you look at these numbers, this should put into context why investors are a little bit more excited. I'll explain why. Now, revenue overall is down 2.6%. That's this top line number here, 34.2 billion to 33 billion. But what's more important is what wireless service revenue is doing. Wireless service revenue is the revenue that they generate from operating that 4G and 5G network. So you spend billions and billions of dollars to build this network. And then as people pay their monthly bills, that incremental payment is very high margin, 60, 70, 80% margin. Where Verizon doesn't make money is in wireless equipment, this little gray box here. That's things like selling you a cell phone at a Verizon store. In fact, they lose money on a lot of those equipment sales. So you don't necessarily want to see equipment sales growing. You want to see this wireless service number growing. And here it has 2.9%, not a huge increase, but a nice $200 million increase in just the last quarter. So steady growth for the wireless service segment is exactly what you want to see if you're an investor at Verizon. And here we can get into the cash flow numbers because this is where the trends are looking really positive. And I pulled all the numbers from the first 3 quarters of the year because they just give you the total for the 9 months. So it's a little bit hard to put these into context. I'm going to start with operating cash flow. So you can see $28.8 billion for the first 9 months of the year. But if you go back to Q1, that was 8.3 billion. Q2, it goes up to 9.7 billion. Q3, $10.8 billion. So over $1 billion increase in each quarter. That's the trend for cash flow from operations. Now, the other trend is that we're seeing fewer capital expenditures. This is things like building out that 5G network I talked about earlier. So you're generating more cash from operations, you're spending less money on capital expenditures. That means you have an increase in free cash flow, but it has not been an even ramp. In Q1, just $2.3 billion in free cash flow. That was not even enough to pay the $2.7 billion the company paid in a dividend. But you go to Q2, that increases to $5.7 billion. Q3, we're up to now $6.6 billion in free cash flow just for the quarter. So now you have an excess of cash after paying your dividend. What does Verizon do with that? Well, they paid down a little over $5 billion worth of debt. This $147 billion number is down only slightly from a year ago. But if you look at it from the last few quarters, it's actually down $5 billion just in the last quarter alone. So really positive trends there. So Verizon is not going to be a flashy company. They're not going to display a lot of growth in quarterly results like this, but it is a company that is steadily increasing revenue in the areas where you want them to increase revenue. You want to see those services revenues go up because that's really where the profit, where the margin comes for Verizon. At the same time, they're reducing the big costs that they have, and that's primarily with their capital expenditures. Now, free cash flow is not incredibly high. Now, I would still like to see them use more of that free cash flow to pay down debt. I'm not as worried about the dividend, but I know that a lot of investors are, and that dividend yield of a little over 7% is really an attractive piece of the thesis for owning shares in Verizon. But ultimately, if you're using that cash to pay back investors now, you're adding more risk to the balance sheet by keeping that debt on the balance sheet. So that's the reason that I would like to see them pay down debt a little bit faster and maybe even pause that dividend. But I know that's not really realistic because investors would not react very positively to that. But the long-term trends for Verizon do appear to be really positive. One thing that I want to note is that we are starting to see them bundle more and more services together. So I talked about the number of connections that they're having both. So they've got connections with customers, both businesses and consumers, bundling more of those fixed wireless broadband services. And then the next thing they can do is bundle that together with content. We're starting to see them do that with Disney, with Apple. Is this going to be the next cable bundle? I think that would give them a really powerful position in the market if they were able to add those services together and make this business a lot stickier than it currently is. Doesn't seem to be driving the business right now, but that's definitely something I'm going to be watching for in the future. Now, the question from a stock standpoint is, do investors give Verizon credit for this increased cash flow and potentially the lower risk that it has as it starts to pay down some debt? The company's price to earnings multiple is still only about 7, and the dividend yield is over 7%, approaching 8% as I'm recording right now. So that's an extremely low multiple and indicates that investors both don't see growth in the cash flow that the company is going to be generating and also put a lot of risk on the company. There is that almost $150 billion worth of debt that Verizon has. And that's a massive risk for a company, even at Verizon's size. But if investors start to see that risk reduce, that's when you would start to see the stock price go up. I think that's what we saw, at least on a small scale today. If these results continue to get even marginally better, even just an increase in free cash flow of $500 million or $1 billion per quarter would be a huge positive from an investment standpoint because it puts that risk level at a little bit lower level. And I think that's where you'd start to see that multiple expansion. So this is absolutely a value stock, but one that I own and continue to be bullish on. I think the trends for operating cash flow, for lowering capital expenditures, and increasing cash flow just continue to be positive. It certainly seems like all of the wireless companies are moving in the same direction. They need to increase their prices a little bit. They need to increase their own cash flow to pay for things like spectrum and the wireless build out that they have already done in 5G. So it looks like they're all moving in the same direction. And that's going to be to monetize a little bit better. That's going to be great for investors. And I think ultimately it will result in higher stock prices. So we saw that a little bit today, but I think that will continue in the future. But I'd love to hear your thoughts on Verizon's third quarter results. Which metrics stuck out to you? Leave those comments in the comment section below. Don't forget to follow Asymmetric Investing. Thanks for watching, everybody. See you here next time.